Jobs are coming back. Jobs are plentiful. That's what we were told, but the jobs were offshored. The primary sector for jobs is no longer manufacturing, it's retail. Lower paying in many cases, but now in 2020, it looks like retail just got a big stomping on, which has accelerated its decline. That's not a good scenario for the future of jobs. You came here for the truth, so let me unveil that for you. Today, we're going to look at what's going on with the job situation. I'm going to give you an update on what's happening with the layoffs. We're going to look at the stock market as well. I want to show you how exaggerated it has become. I'm going to show you some information that we generally aren't going to hear in the mainstream news, but I put it together in this video. Let's get into it right away. Job growth appears stuck in neutral after enhanced unemployment expired. We knew that this was coming. We knew that they wouldn't be able to grow from this point on. There will be a level of stagnation for a period until things can get back and growing. Again, all we need to do is print several trillion dollars more. We need to go into another deficit for the US, multiple trillions of dollars. They need to expand the debt. They need to increase taxation. They have to create more austerity on the people, and that's it. That's the solution. It's so fantastic. It's definitely going to work out. I see a lot of positivity there. Data from the staffing firm Homebase showed that the time worked by hourly employees at small and medium businesses was still more than 20% below where we were in early 2020. This is important because they track all this data, they see it all, and it's just one statistic as always. However, I love the fact that they're using small and medium businesses because that's the majority. That's where most of the stuff is happening, so we can track that. And this is just one stat. If you look at what's going on with the airlines, are people flying and are they using different tourism companies and maybe the restaurants? And we start pulling the data from all these different places and things start to make a lot of sense. If we are only going to focus on the PE ratios, which I will cover in this episode, you're going to get a very small picture. I noticed that a lot of very inexperienced, I don't want to call them investors, but people who put their money into stocks are looking at very basic things. They say to themselves, I am going to invest in 7 shares of Amazon. Why? Because I buy everything on Amazon. My friends buy everything on Amazon. Amazon is looking to grow. Amazon has been hiring people, and most importantly, the stock has gone up. If I look a year ago, if I look 5 years ago, the stock has gone up. Therefore, I'm going to buy those 7 shares of Amazon. The same thing applies to Apple. Oh, I know everybody is buying from Apple. Everybody wants a new iPhone. New iPhones are coming out. If I wait a year, another iPhone is coming out. People line up for the iPhone. This is it. They are now getting into services, and that's expanding their business and their bottom line. And they're the biggest company in the world, and the stock can go higher and higher and higher. But this is not the way that analysis happens. This is the way that bubbles are formed. They continue to go up and up and up, and they defy logic. They defy everything. If you look at what was happening in January, there was a real serious scenario all around the world that should have spooked the US markets. The other markets were getting spooked already. We had problems in the economy and so on in different spots around the world, but the US market just kept going higher. And then it was beaten down so severely. And why? Because it accelerated despite all of those problems that were happening. That needs to be understood. U.S. private payrolls miss expectations point to slowing labor market recovery. There are the numbers if you're interested. This is more of just the same information. All I'm showing you here is that they would tell you that the growth is this way, or the V-shaped recovery that everybody wants to see. But unfortunately, it's looking a lot worse. And for some places, it just won't recover. That's just a matter of fact. And when the system has been set up and designed in a certain way that makes recovery more difficult, certainly you're going to expect this, and that's what we have. Exxon weighs global job cuts after unveiling Australian layoff plan. They cover some of the details. The actual total amount of jobs has not been disclosed yet, as far as I'm aware, but this is yet another company. We're talking about a company that not that long ago was the biggest in the entire world. It really wasn't that long ago, I think 2013 or so, and now today it looks like a completely different scenario. That right there just shows you how much can change in a short period of time. It's unfortunate to see the way that we have jobs that are truly being affected by this. And you might say to yourself, well, it's just one company, but it isn't. Look around and you see how much of an impact this has had, not just on JC Penney and Sears, but of course on companies like ExxonMobil as well. So I had talked about this in the previous video I had done. American Airlines cutting 19,000 jobs, United Airlines cutting 16,000 jobs. But check this one out. Cost cutting includes airline jobs. Around 190,000 airline job losses announced so far. This, of course, was all around the world. You can see right here on the left-hand side, airline redundancies announced. Love that word they chose. On the right-hand side, employees per 10 million ask. I've covered many of these throughout the weeks, so you probably know about a lot of them. But we are really encountering a scenario that is not going to be resolved in 2020, in 2021. Many have said 2022 and 23 are when airlines will start to be back at the levels they were at before. That means it missed out on all that growth. That means all the job opportunities and situations that are going in line with that. How much of the robotics and automation will replace some of the jobs that were there previously? What's going to happen to those people? Are they just going to hang out for a few years while this all really resolves itself and people feel more comfortable and so on? The whole deal. But this just shows you an outline of what's been happening specifically with the airline jobs. I've covered why the inflation rate is not real, and this article actually got into it, so I thought it would be interesting to cover very briefly. The latest inflation statistics say that prices have risen by only 1% over the past year. Right away, for anybody who's informed, that should be sending off warning signals, flags, every siren and light should be going off. I mean, come on, 1%? That is so ridiculous. But there's something wrong with those numbers because this situation in 2020 has made economic life more expensive in ways the official bean counters aren't capturing. This distortion has led other economic statistics to paint an artificially rosy picture of our current situation. The problem is that measures like real output, real wages, and poverty are calculated using inflation adjustments that don't reflect the higher cost of living that we are seeing today. Look at food prices, look at energy prices. Things are truly very high. This might help explain why measured poverty has fallen even as lines at food banks have grown. There's more in here if you want to read it, but I just thought it would be interesting to cover for a second while we really deal with the problems that cannot be resolved by printing money. Isn't that interesting? Inflation rate going higher, the real inflation rate, food and everything else that's been adding up, that puts a huge burden on those who don't have that income right now or are right at the line. This ends up pushing them over. This is a serious scenario for a lot of people. Even New York City's Michelin-starred restaurants are struggling to survive. Right here, it's not just McDonald's and your restaurant down the street. We are talking about some really high-end restaurants that don't have the amount of people that were coming in before, and they're going to shut down. There is some detail in here if you want to check it out, but essentially we're looking at this all across the spectrum, and that's why I'm pointing it out here. I've been touching on this all along, different retail establishments. This happens to be restaurants. Everything seems to be affected, and this is going basically all around the world. US debt is set to exceed size of the economy for the year. It's the first time this has happened since the 1940s. This is unbelievable, but it is expected. The expenditures have gone through the roof, and at this point, nobody's going to say don't spend any money. They're just trying to decide where to spend the money. They don't even care really at this point. It's all garbage. When I see the news pop up, I can't skip it fast enough when when we're looking at, oh, they want to decide it's going to be here, and oh, we're having trouble coming to terms on this and that. It's a joke. It is such nonsense, okay? They make it seem like they battle each other, and meanwhile, behind the scenes, nobody gives a damn. Look at what's going on today in the markets. Nobody cares about this either because their 401k, their retirement account, RRSPs, their supers, wherever you live, are relying on this fraud to continue forevermore. The S&P 500 PE ratio at a record high. You can see that it has exceeded the financial crisis, far, far beyond that. You had some spikes here and there. You had some volatility here and there over the last several years, but it is just through the roof right here. And that has actually exceeded what was there during the dot-com boom and bust. Imagine all of these years after the dot-com boom, they were referencing it. Everyone would say, you remember when these ratios were all off the charts for 2000? You remember how crazy things were? And right now we're looking back at it and we're laughing and we are suggesting that this was a time in which they could get away with anything. I can't believe it. This was ridiculous. And now today we've gone beyond that. And not only have we gone beyond it, because certainly, just like the S&P 500, the Dow Jones, the Nasdaq, you would expect at some point, after a crash, after there's corrections, that you would go beyond it. So that is expected. However, when we go beyond the record and believe that there is no end in sight, that's when you've got a problem. For my friends in Australia, the Australian dollar has spiked nearly 30%. I didn't realize it was that much, but apparently it has really, really soared higher since March, defying the downturn. In March, the Australian dollar fell to a low of 57 cents against the greenback. Now, today, it's a very different scenario. This is obviously beneficial to those who have to buy basically anything in Australia, because when you've got everything priced in US dollars and you've got a weak currency, even if it's domestic, you have problems. There's no doubt about it. This affects you in every single way, and those who live outside of the United States really know what I'm talking about. Two more things quickly. Has your monthly spending decreased for any of the following reasons? This happens to be part of SurveyMonkey. This is just, again, as always, a survey. But look at this. Worry about the current economic situation. 53%. 53% are concerned today about what's happening. And I think probably the number's even higher. But regardless, you've got a lot of people that had to decrease their spending. That slows down economic activity. Whether the concern is legitimate or not, doesn't matter. People are just saying, you know what? I'm not going to go on that vacation. I'm not going to spend that money at the store. I'm not going to go to this place or that place. And that really slows down the economic engine, and it's harder to get it back up and running. I'm just going to touch on this quickly. It's a Bloomberg article, and then I'm going to move on, finish the video off. I'm not going to be able to cover the information in here in depth, but about a tenth of the American households have reported that they haven't had enough food in a given week. And that one is just truly unfortunate. You think, you've got Amazon stock and Apple stock and all these people making money hand over fist. Well, at least their assets are appreciating. They probably haven't cashed out on that. But anyway, this is just showing you that there's this huge divide in between the haves and the have-nots, and it is clearly obvious right here. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. That's all you got to do is click that one button. Thank you very much. If you want to learn how to sell stuff online, you want to understand e-commerce, you can do so for free at the AmazonGPS.com. If you want to learn about the financial system from top to bottom, you want to be able to ask the right questions, then these two books will give you everything that you need. You can get it at the link in the description. If you want the audiobook instead, you can get it at themoneygps.com. Wait a second, have you seen this video? Covered some really good information in here. If you haven't seen it, definitely click on it. I'll see you there.